Good evening, everyone. Welcome to a new episode of Investing Fool. Hope you all have been doing well, and hope your portfolios also have been doing well. At least in the last couple of days, the markets were going in one direction for many days, and then in the last couple of days, they have kind of turned around. So in today's video, we'll talk about the market. We'll talk about the portfolio, what the portfolio has been doing. There have been some news about some of the stocks in the portfolio, so we'll discuss that. So let's just get started. And before we move on, the familiar disclaimer that none of the stocks described here should be taken as investment advice or anything like that. These are just for educational and illustration purpose. The entire portfolio is just for educational purpose. So without wasting further time, let's get started. So markets have rebounded quite nicely. We are still not at the top, and we still do not know whether the rebound that has happened, whether it will continue. So that continuation is kind of anybody's guess. No one knows. And as they say, bring your own beer. So you can bring your own reason for why this volatility was happening. The primary thing that looks more likely as of now is probably the state elections in Haryana, and the results kind of surprised everyone. I'm not sure why the exit polls keep faltering like this, right? In the general elections also, they kind of gave a shocker. In this elections also, they kind of gave a shocker, right? So the results were very much against what the exit polls had predicted, and also the probably based on the exit polls and based on the expectations, the market had priced some of that in, and it rebound once those fears were erased. But then there were a lot of other factors also being floated around, that money is moving from other emerging markets to China, and then the Chinese index fell. So all those murmurs kind of fell down with that. The Israel-Iran tensions in the Middle East are a popular favorite. Then the US going into recession bit. There are now talks that rate cuts may not sustain in the way they were earlier expected. So we may take a pause in the rate cuts for some time, because the unemployment scenario in the US is not as dire as many people might have assumed earlier. So people have been saying a lot of different things in a lot of different times. So some will say that, okay, the economy is already in a recession. Some may say we have a 15% chance of getting into a recession. So I don't know what to make of all that, right? We do not have any choice other than to follow our strategy and to continue sticking to our portfolio, to continue remaining invested in the market. That's the most important thing. We cannot be outside of the market even for a single day, right? Unless all hell has broken loose. So you can pick your own reason, whatever out of these four, or you can create your own reason also. But volatility is the nature of the market, and we saw huge reds, and then in the last 2 days there have been pretty significant greens. Portfolio, our core momentum portfolio is close to the all-time high. But one thing I wanted to mention for like all our viewers, and most people would know this, but some of you may not realize it, because we as humans, we tend to think in linear terms, right? We do not think in terms of percentages. So a 5% fall and a 5% followed by a 5% rise is not the same. So many people might think that it's kind of a net zero, but that's not how it happens. So let's assume you are at 100, right? And you gain 50%. So now you are at 150. Now you lose 50%. So from 150 you go to 75. So net you have lost 25%, right? But it doesn't feel like that. Take another example. Let's say you are at 100, you gain 100%. So you technically became the stock technically became a multibagger, right? Or your portfolio became a multibagger. So from 100 you went to 200 by gaining 100%. Now even if you lose 30%, right, most people would assume that if they gain 100% and then lose 30%, then they would somewhere around like 60%, maybe something like that. But it's much dire than that, right? If you lose 30% from 200, then you are at 133, right? So in effect you gained 100%, then you lost 30%, but overall you gained just 33%, right? So that's how bad it gets. So when the market falls 5% one day and then followed by a 5% rise the next day, then you should not be happy that okay, net I'm zero. You in effect you have lost it. You have lost quite a bit, and that is because the base or the starting points for both those calculations are different, right? When you are rising from a smaller base. When you're falling from a larger base. So you have to take that into account. So just keep that in the back of your mind. Okay. In terms of sectors, in recent times, IT, pharma, and auto are the only sectors with positive returns in the last week. So let's just take a look at the sectoral indices here. So if we look at the 1 week returns, so you can see almost all the indices are in negative. IT is in positive 2.1%, pharma is 2.6%. And okay, realty is positive, but it's mostly aided by today's gain, right? It was also negative. So yeah, these are the only sectors with positive returns in the last 1 week. And realty, talking about realty, it's now the worst performing sector in the last 3 months, barring PSU banks. So you can see the chart on the right. So almost from, and this chart is from yesterday, so forgive me for not updating this chart. So today's movement is not accounted for in this chart. But if you look in the at the like what the realty index was doing before June, let's say before June, and then the trend afterwards, right? It has literally gone nowhere. In the last 4 months, the returns have been like 0%, and that kind of shows you a slowing momentum or a slowing trajectory, right? Because if you look at the last 1 year of returns, if I go back here and last 1 year of returns, realty is actually the second best performing index after CPSEs, which we know have been performing like crazy in the last couple of years, right? So this at 80% and realty is at 74%. So even after this kind of performance in the last 4 months, when we look at the last 1 year of data, realty is still the second best performing index, right? But if you come back to like the last 3 months data, you see the difference. In last 3 months it has given minus 5%, right? So you kind of see a trend slowing down, and whether, because realty, usually these are like long cycles, like 8-10 years cycles, or maybe like 6 to 8 years, whatever. But the cycle has not completed, at least in my perspective. So it could be like a time correction for some time, and then the realty index could again go forward, because these cycles do not subside that easily, historically at least. At a broader level, indices are still comfortably above their 200-day moving average, so no concerns in that regard. Gold price has slid down, and this is one reason why my overall portfolio today didn't grow as much as the momentum portfolio that we show here. That's because gold bees was down today. And internationally, gold has been waiting for some cues from the FOMC and the inflation data in the US. Based on that, there could be some rethinking on how the rate cut cycle is going to pan out in the future, and based on that, gold prices may be adjusted, because whenever people are expecting aggressive rate cuts, then that gets priced in, and gold typically inches higher within an interest rate cut environment. But yeah, now there are some fears, or not fears, maybe some concerns emerging that rate cuts may not be as frequent as we thought earlier. So that could be one reason why gold is taking a bit of a pause. But yeah, anyway, like I have been continuously adding a gold to my portfolio to take my allocation from 20 to 25%, and I will continue to do that in the coming months as well. Okay, so now some stock specific news. Of course, you can see the news on the right side with Trent. We'll come to that. But if we look at the overall portfolio, most stocks have slid down in the last 10 days, and the worst performers have been Inox Wind and PCBL. So let's take a look at the last 10 days. So I'm going to the last 10 days tab here on the momentum sheet. By the way, if any of you are watching this channel or any video of this channel for the first time, so this portfolio, like all the stocks, when we buy, when we exit, all of this is always available in public in real time, so you can go and check them anytime you want. The link is in all our video descriptions, so you can find it there. Anyway, coming back to the last 10 days performance, you can see that this is the base, right? So this is 100, this is the base, and you can see that only a handful of stocks, 3 stocks, one of them is Trent, have actually gone higher than where they were 10 days ago, right? And probably Zomato is another, but majority of the stocks, if you look at the all the other stocks, like barring these three stocks, maybe all of the other stocks have kind of remained thereabouts or have fallen. And of those fallen lot, Inox Wind and PCBL have kind of fallen the most, and there seems to be some recovery. Even today, Inox Wind was up, I think, around 2.5%. Okay, by end of day it was 4.4%. Okay, great. And PCBL was up 2%. So these guys recovered a fair bit today, but they still have lost quite a bit of ground. And you remember the KZI race that we keep talking about, right? Kalyan, Zomato, and Inox Wind. In within them, Zomato has started performing again. So Kalyan is also above 90%, but all of these were in 80s, and Zomato was slightly getting backward, and Inox Wind had a good run, but now Inox Wind has corrected quite a bit and it's come in the 60s, and Zomato is again close to 80. So this keeps happening. This movement will keep happening. We'll see how the stocks perform in the long run. As of today, if I had to rebalance the entire portfolio today, only one stock would exit the portfolio, and this is also a very thin margin. So let me show you. So none of these stocks would exit if I had to do the rebalancing today. Only this stock would exit, which is Oil India. This was pretty close to getting exited last time around also in the last rebalancing, but on the rebalancing day, the fall from the top was around 24.4% or something like that, right? So we stuck to the rule and we didn't eliminate it. And there is a chance that could repeat in this rebalancing cycle as well, because again you are seeing that it had fallen quite a bit, then it recovered a little bit of ground, and it's still hovering around the 25% fall from the all-time high mark, right? So it may so happen that on the rebalancing day, it might again go to 23% fall, right? And then again it would not meet our exit criterion, and we may continue the entire lot of stocks for the next cycle. So if you remember the last rebalancing, we did not change even one single stock in the portfolio. Everything remained the same. So as of today, except oil, everything remains the same, right? So we will go to a potential rebalancing in the next 6 days, and if oil also comes within the 25% mark, it may so happen that we again do not change anything in the portfolio, and that is not a bad thing. Like in fact, that is one of the best things for me. I do not want a lot of churn in the portfolio. So for those of you who are like following DIY momentum strategies, it also helps to have a bit of a relaxation in terms of your exit criteria. Do not have a lot of like tight trailing stop loss like 10% or something like that, because that would lead to a lot of whipsaws and a lot of churn, right? So keeping like a worst rank held, which is substantially more than the number of stocks in your portfolio, and when you're looking at a deviation from the top also, that you can also keep a little bit relaxed, so that you can minimize the churn. You have to think in terms of deciles, not ranks. So what I mean by that, and why I'm saying it in the context of churn, is because people like when they look at a screener, like let's say we go to our screener, right? So this is where we are. So someone might assume that a stock at rank 8 will perform at like better than a stock at rank 11 or something like that. So if this is continuing in your portfolio and this is kind of losing, then you might, all of these stocks are examples, by the way. I'm not taking any stock name. Just think of them as stock number 11 and stock number 8, right, in terms of rank. So stock number 11 is not performing that well, and you kind of are getting biased that I should remove the stock, and a new stock has come which is at rank 8, and I should get the stock of rank 8 into this. Doesn't like help a lot in the long run, because there is no guarantee that a stock at 8 will perform better than a stock at 12. There is nothing like that, right? So think in terms of chunks of this portfolio, things in terms of deciles. Of course, the top decile would perform much better, has a higher likelihood of performing much better than the bottom decile, right? So you have to think in terms of that, not individual absolute ranks. एक रैंक इधर उधर से बहुत ज़्यादा कुछ फर्क नहीं पड़ेगा. एंड इफ वी, सो फॉर एग्जांपल लेट्स से इफ यू हैव अ वेरी वेरी स्मॉल पोर्टफोलियो, I mean portfolio size is small, let's say, and you get a stock like let's say Page Industries or Bosch or anything that is above like 30-40,000, right? And you are you feel that you cannot allocate as much to that stock, or you may not get as many units of that stock. The way distribution would kind of be hampered. So you can just take the next stock, right? That is perfectly fine. You do not have to like stick to key, like if I miss one of these stocks of the top 20 stocks, then all hell will break loose or anything like that. So don't so it's generally a very flexible strategy. So you have to be in the correct ballpark. So always remember that in momentum you have to be in the correct ballpark. The full like nitty gritty or the absolute one or two ranks here, it won't matter that much in the long run. Anyway, coming to the stock specific news. So Trent, our star performer, is here with a couple of news. So it launched the Zudio Beauty as a new store format recently, and it also launched a new lab grown diamond brand called Pome. I don't know what the pronunciation for this is, but it has been launched in Western India as part of West Side stores, uh, and the stock price recently factored this in. I was actually kind of surprised because most of these things, at least like launch of a brand, acquisition, and all these things, usually get priced in pretty earlier, right? So I don't know why the stock price still showed a lot of appreciation, but it crossed 8,000, and it has helped both our core portfolio and the Nifty top 10 portfolio also, where it got recently introduced. So slowly, somewhere like it is getting into like with lab grown diamond, it has ventured into the proper jewelry space. But obviously, those are not natural diamonds. But somewhere it is getting into some sort of synergetic market capture along with the big brother Titan, both from the same group, obviously. So yeah, that's one thing. Let's look at where Trent is currently in the portfolio. So it's at 175% net gain, and even today it has gained by 2.34%. Right, so pretty good run. Many of the stocks recently are like pretty close to their all-time high. So Trent is one of them. It has now actually reached 8,200. Dixon is another one of them, and Power India is also another one which have hit recent new highs. Okay, two other news items. So Kalyan Q2 FY25 results were out. Consolidated revenue was up 37% year on year, and the growth in the Middle East like division was less than what was seen in India. Uh, Another news was on Torrent Power. Torrent Power got a new 1680 crore order in Maharashtra, and the stock was up. It was up quite a bit intraday today, but by the end of the day, lost a bit of a ground with the market. So the market was also quite a bit up, right, intraday. But then by the end of the day, we were losing. We lost some of the ground, and the stocks also fell back accordingly, right? So Torrent Power ended 6.2% up, and so those were the stock specific news. 2 points that I wanted to discuss while we come to the end of this video is, first of all, is about the necessity or the importance of having emotional balance as a long term investor, right? We are not traders. The best thing that you can do, the absolute best probably that you can do for your portfolio and for yourself, is to completely automate it, right? So no human element should be present in any decision in the management of the portfolio, and no discretion should be like all discretion, all bias should be eliminated that way. So whatever logic you have set for the robot, it will just keep executing that, right? And the next best thing, if you cannot automate it completely, the next best thing is to try and change yourself into a robot, right? So try to be as stoic, as sanguine about the market as possible. The good and the bad shouldn't affect you as much, right? So when good things happen, when the market rallies and everyone is happy and dancing, probably you shouldn't be that happy. You should realize that like all of these gains, everything that is happening in the market, as long as it's notional, like all of these gains are notional, it can be erased, it can be wiped out in a single session also, right? If anything very very apocalyptic or something like that happens, or even like a very big shock, relatively very big shock, in a few sessions everything can be eroded, right? So you always have to keep that in the back of your mind. Similarly, when bad things happen, like when every naysayer is saying, okay, the bear markets have started, Nifty will go back to 7500 or such bullshit, just to get attention, you shouldn't accord a lot of your attention to that noise and to those naysayers. I'm not saying that Nifty cannot go back to 7500. Of course, anything can happen in the market, right? But you don't have any control over it. So better not take those things to heart. Better not react on those. Like, you should never have the impulsive, like with every correction, if your stocks are falling like 9 pins, you shouldn't have hit the panic button and start selling some stocks, because if you sell, then if you get out of the market, then whenever the market recovers, if it recovers, it won't help your cause, right? So you have to learn to ignore the noise. The last thing is, if you are having second thoughts about your strategy after every minor correction, and market keeps throwing these corrections every every few months, right? You see something like a 5% correction every few months, and we should just internalize that this is going to happen. The reason doesn't matter, that corrections will be part and parcel of it. Volatility is the name of the game, right? But if you are having second thoughts, if you're trying to tinker your strategy, if you're trying to question your strategy, whether I was right, whether I was wrong after every single correction, then you have to rethink your approach, whether you want to be in something like a momentum investing or not. Because momentum by itself is a high beta strategy. I always say it's a very, very risky strategy. You can be down for years. India has not seen such markets in recent times when momentum has not performed for like 5, 6, 10 years, right? But it has happened in other markets. It can happen anytime in India. So you should be ready for that. You should be ready to lose 70% from the top. Like, you should be ready to have drawdowns of like 60-70%. Look at some of the drawdowns of indices like the Nifty 200 momentum 30, Nifty 500 momentum 50 in their backtests, right? And you will see similar drawdowns in their history. So that can happen anytime. So you need to rethink. If you are having like second thoughts, you need to rethink whether you should be in momentum or not. The second thing that you can think about is your asset allocation. Maybe you are too much in equity and you do not have adequate exposure to other asset classes, right? So be it debt, be it gold, be it whatever else, real estate, whatever, right? You can you can rethink on that, whether your approach to asset allocation has been correct, or if you have overexposed yourself to equity, right? Let's take a final look at the portfolio, what happened today. So today we were up 2.1%. Our benchmark was up 0.4%. In the absolute pre-tax terms, we are kind of now 14% above the index, but as I always say, this can get erased anytime. In terms of the stock performers, the winners today were Inox went 4.4%, but this was after quite a bit of fall over the last week or so. Torrent Power was up 6.24%, Oracle was up 3.9%, Glenmark 3.3%, Trent, as always, giving very, very positive vibes. In terms of sectors, I think IT was good today. Okay, no, IT was still 0.5 only. Pharma was up 2.04%, Realty was up 2.15%. Okay, now let's take a look at the Nifty top 10 portfolio. So what we see here is that the alpha here, the pre-tax alpha here, has stretched to almost like 7% now, and that is because of Trent, right? Trent recently entered Nifty 50, and because it has the best momentum ranking in kind of any universe that you take, whether you take Nifty 500, Nifty 750, in terms of the indicator that we use, Nifty 50, it is present in all these indices, and it is rank 1 in like all these indices because of the splendid performance that it has been doing. So even after like joining Nifty, I don't know how long it can sustain, because a lot of the potential growth in the future, like value unlocking, everything has already been factored in, and most of, like, even more than that has been factored in, right? So it probably be maybe just a matter of time because before trend also goes into some sort of time wise correction, or maybe even the fall in the stock price. But we'll see it as it comes. For now, even after entering, it's showing a good trend, and today it was at 2.3% net. It has gone up by 7.8%. So total we are at 19% up from March 24 versus Nifty 50's return of around 12% from that time. And yeah, as far as the other performers, we can see Bajaj Auto is still the highest performer, followed by M&M. So autos have been driving this portfolio kind of for some time, and we'll see how long that trend continues. So yeah, I think okay, yeah, this is something. This is actually yesterday's gain. So let me just yeah. You can see yesterday's gain was 3.76%, and yesterday's the benchmark was also 1.5% almost up, and there were a lot of stocks with a lot of gains. So Trent was up 8% as we discussed earlier. Dixon was up 8%, went to a new high. Zomato was up 5% yesterday. Godfrey Philip was up 7%. Jubilant Pharma was up 5.7%. But these things keep happening when markets fall quite a bit. Then the falling ones also rise quite a bit, and the stocks that rise the most, they also kind of fall the most. And the stocks within that, the subset of stocks that do not have any earning support or maybe are overly dependent on government, they tend to fall even further, right? So that is a trend that keeps happening. But yeah, this was it for today. So thank you all for watching. If you're watching till now, let me know your thoughts in the comments below, and you know what to do. You have to like the video, share the video with your friends and with like-minded people, and subscribe to the channel if you haven't subscribed already. See you in the next video. Till then, take care. Bye bye.